Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Monday afternoon. I was just looking down at this local market to see, how this day has unfolded because, of course, lots of uncertainty in the global environment with Donald Trump coming out with his 15% tariff plan. So, whether or not that comes to fruition, whether or not there's some sort of nuance that comes in around all of that remains to be seen. We will see what happens when U.S. trade resumes in a few hours' time. Safe to say, though, we came out of the gates looking pretty positive, now down by about 0.6%. So we'll continue to keep our eye on that market, and we'll check in with the S&P ASX 200 when the last of the day's trades have gone through. So yeah, you could call this a bit of a tariff tango. As you know, the Supreme Court in the United States struck down Donald Trump's reciprocal tariffs, and therefore he has enacted a part of the Constitution that will allow him to put some tariffs on, although that potentially could be challenged as well. So lots to go in terms of, watch this space for those tariffs. We are watching the energy complex with much interest because we do have an escalating of tensions between the United States and Iran. So questions whether Iran will back down, will it capitulate, will it agree to Donald Trump's terms when it comes to ceasing its nuclear program, or will the the leaders there continue to talk really tough in relation to the U.S.? All I can tell you is that E-minis in the United States are also coming under quite a bit of pressure, down by pretty close to 1% for the NASDAQ, and the S&P 500 just past 4 p.m. here in Sydney. And of course, we're in the middle of reporting season. It is the last official week, but it is a big one. Today was busy. It's not really petering off yet. And we get some big retailers, some big consumer staple REITs coming a little bit later this week still as well. So let's check in on some of the big sectors and how they moved today. Still a lot of pressure coming through on these tech names as this rotation from growth names to more value names looks to be gaining momentum. And you've got some of the idiosyncratic results coming through and impacting price. Data 3 is a perfect example, down by 14% in the wake of its result. Energy, as I said, gaining a lot of focus. However, if we look at the energy complex, not looking crash hot. We've got crude, Brent and light crude coming under a bit of pressure in this Asian session. Woodside Energy, though, I will say it was mentioned on the call. It was a blue chip special. And so you'll want to watch that episode, I believe, to get a view from Nathan Samasundaram and Raymond Chen from Morgans. Gold was a real strong part of the market today. No big surprise. We've got gold prices lifting in Asian trade, so that's been good for the gold miners. Newmont up by 4%. Greatland Gold, it did report today. It's up by 7.25%. All right, in some of that news coming from results season, and Ampol has suffered a 33% decline in stat profit after tax to $82.4 million. NIB now expects its underlying profit to lift in FY26. Don't forget, these guys got a boost last week when the government allowed their premium increase. I think it's the biggest one in 8 years. Austal lifted half-year earnings, grown its order book to a record $17.7 billion, but the market not liking margins in the U.S. Lend-Lease, meantime, swung to a half-year loss on impairments and revaluations. Its CEO said that transformation is still ongoing. And Aussie Broadband's net profit after tax fell 58% on impairments. It was a goodwill impairment of $14.8 million. Also acquired a brand and divested its cloud brand. EOS saw overall net profit rise for the year, although it made a loss from continuing operations. Revenue fell by half to $131 million following the completion of work related to a long-standing contract in the Middle East. We spoke with Andrew Schweier.
2025 was our last year of our 3 years restructuring program, which we have successfully completed. our major focus was on increasing our order book, and we were quite successful in signing orders last year of more than 420 million Australian dollar, increasing our actual order book of unconditional orders up to 459 million Australian dollars.
All right, so that is EOS's CEO. You can catch that online if you'd like to listen to it in its entirety, or you may listen to that on YouTube as well. We do have an AusBiz YouTube channel, in case you were wondering. All right, let's get some analysis now. A very warm welcome to the COB, David Scott from StoneX. Scotty, nice to see you on this Monday. Yeah, I sort of had a chuckle when the market lifted in the immediate open just past 10 a.m. because, like, what's going on with this tariff situation? It's pretty unreal.
G'day, mate. Great to be back and 100% spot on. Just another layer of uncertainty on top of a lot of uncertainty out there at the moment. Probably didn't come at a great time for the local market, which was trading at a multi-month highs. And we've seen a pretty stark reversal over the course of today's session. Although I would point out that we haven't seen normal volumes going through our market or other markets today because we're seeing both Japan and China are offline until tomorrow.
Okay, so it's always worthwhile to keep that in mind because volumes can sort of move prices a lot too. Where were you seeing the activity, Scotty?
It just feels like a repeat of the Liberation Day route episode, although on a very granular scale, it's got to be said, nowhere near what we saw back then. But it's all the same place. Even though the effective tariff rate hasn't changed too much, we're seeing that gold has been bid, precious metals have been bid, and the US dollar has been just generally softer, particularly against the European markets, the euro, the pound, and the Swiss franc, which suggests that we're seeing, again, maybe some evidence of this shift away from US dollar denominated assets to other parts of the world, like we saw back then, the Sell America trade. But again, as in Asia, when there's two of the biggest markets are offline, I'd want to see how Europe handles it, and of course, US later on in the session.
Yeah, before I came on air today, or when I came on air, I said the Australian market really is the first major market to be able to react to that news that came through over the weekend. But, I mean, what does this mean for this big, beautiful bill and the tax cuts if President Trump is unable to enact the tariffs as expected? Because, I mean, that's kind of what it's paying for.
You'll spell trouble with a very big capital T. The bond vigilantes are already lurking, and they don't need much encouragement right now. And if you've got a whole bunch of unfunded spending plans coming through, tax cuts and everything else that can't be funded, the back end of the Treasury curve is likely to go and fill very, very hard. And so we're seeing maybe some evidence of that at the moment. Also, the US dollar as well would be in the other firing line. So anyone hoping for some capitulation from Donald Trump, I hate to break it, but it's very, very unlikely. If he capitulates, it's going to unleash fury in that bond market. So he has to go and make sure that this revenue is going to be in one form or another. And as you rightfully pointed out, whilst this 15% Section 122 tariff that's been put in place now for 150 days starting tomorrow is going to be a short-term fix, it opens the door for legal challenges, and there's no certainty it will be there. So something we can't figure out exactly in the very ultra near term, but really concern out there if you can't go and plug that budget deficit.
No, and so I don't think it's a surprise we're seeing gold lift today.
Yeah, it's finally broken out. It's been sort of calling up beneath 5,100 for a while now. And then on the back of that, we're seeing a nice little move. You can see there, it's been calling up, and we're seeing that move above 5,100. So that bodes well for the bulls. Now, we're seeing a period of consolidation. And the fact that we've managed to go and break above that, if we can stay above 5,100, it points to an increasing probability that we would like to go and resume our drift higher and then potentially look at a retest of the record highs. But obviously, we'll see what happens later on in the session and the days ahead. But that's a good sign for gold. And we've got a fundamental backdrop that also favors bullion.
What's been happening with iron ore? Because how is that impacted from the Lunar New Year holiday, which, of course, we're seeing Chinese markets return from tomorrow?
It's been hosed and been hosed for a while, but interesting, we've seen very, very low volumes as you'd expect with China offline. SGX futures is what I like to go and look at when Darlene is shut. And you can see here, it's been a very ugly bear market trading beneath the 50 and 200 day moving averages. But today, we know the Chinese markets are back online tomorrow. We're seeing evidence of a potential bottoming in place. A morning star pattern is what we're looking at right now. It's not yet completed today's session. But after such a big pullback, we've got it oversold. And we know that when it comes back to China, one of the very few benefactors from what's happened with this tariff scenario as well, effective tariff rate there has been reduced. Maybe we see the grounds for a bounce there. So I'm not surprised to go and see some of the strength today in the mining stocks.
So we are, into the European session. European markets closed like at record highs on Friday. Of course, this was pre-retaliatory tariffs from Donald Trump coming through, or that across-the-board tariff, I should say. I was doing a little bit of reading that perhaps Europeans think that this might help their case when they're coming through to trade negotiations. But what type of reaction are you expecting to see in Europe, and what could that sort of tell us about what perhaps we can expect in the US?
Relative outperformance compared to the US markets. In short, like we saw post-Liberation Day, we saw that there was a clear shift. It has rallied very, very hard. And the question marks out there as well when it comes to Europe and how it might go and handle it. There's murmurs that they might go and freeze the deal, the ratification of that deal that was struck back in Scotland last year. Of course, we're dealing with a scenario now where we have these tariffs that the deal were built on have been ruled illegal by the highest court in the United States. So there is grounds for pushback here. Whether they want to go down that path and risk a trade war is probably debatable, but it's something to go and keep in mind. So whilst the outlook for European markets have been very good, and cyclicals have done very well there in particular on the back of all that fiscal stimulus, it's just an area to be a little bit concerned about. But on a relative speaking, I'd rather be in Europe at the moment than the US, particularly given some of those valuation concerns in tech.
Yeah, although software, boy, that's a story for the ages. We'll be talking about that one for a while. All right, so data here, we do get inflation. Do you think that that's going to be very influential when it comes to RBA thinking, the Aussie dollar and the like?
My heart says it should. My head says it won't, because the RBA's got a track record for really being sticklers for waiting for that quarterly trim mean inflation print rather than what we see at the start of the quarters. But we've got a full CPI basket now. We've had a very, very strong labour force survey last week. Unemployment, of course, now holding steady, and a big increase in full-time work. When you put that into the mix, you see the trend that we're seeing in some of these inflation reports as well. When I look at what markets are pricing for a March hike, it's only around about, sort of 12, 13%, depending on when you look at it. That's not a lot given the trend. So if we do get a really big upside surprise, and there's lots of evidence of strength, particularly in that services parts of the economy, then it could go and flip to being something closer to line ball. But again, it comes back to, and I agree with market pricing, the RBA tends to like to go and wait for that quarterly read, which points to May being the most likely lift off if we see another hike coming through.
Yeah, all right. Even if I'll let you go, but what's your view for the US dollar? Because it's a bit complex right now.
Yeah, it's had a lot of problems at the moment. It had a bit of a rebound coming through, and some of the data was looking pretty great. But again, the tariff uncertainty, the policy being made at a whim, having a 10% tariff rates put on Section 122, then upping it to 15%, the maximum, less than 24 hours later. We know from history that doesn't typically go and bode well for US dollar strength. Now, yes, I know that the GDP figure released on Friday was a bit softer, but when you look at some of the other details, it was very, very firm, particularly that core PCE deflator. It's got a bit of a push and pull feeling at the moment. I expected it would probably perform a little bit better against some of those more high beta cyclical names like the Aussie after the move that they've seen. But against the European names at the moment, and particularly against the yen, it does go and point to maybe risk being tilted to the downside for the buck.
All right, well, look, we've got a lot to consider as investors these days. As always, David Scott from StoneX, thanks for joining us.
Great to be here. Take care.
You too. Yeah, it's really interesting just watching some of the breaking news headlines that are coming out on Refinitiv, my Reuters screen, just saying that China is assessing that US Supreme Court ruling, saying that, quote, fighting is harmful. Also some analysis saying that tariff and the reset that's happened around tariffs really weakens Trump's hand when it comes to tariff talks with China. And just a lot of reaction to that U.S. Supreme Court ruling and Trump's new tariff reset is what it's being called. Chinese Commerce Minister says that he's making a full assessment of the ruling and urged Washington to lift unilateral tariff measures on its trading partners. The ECB Central Bank President Christine Lagarde said on Sunday that the upheaval in U.S. trade policy could again disrupt business and hoped that any new tariff plans were, quote, sufficiently thought through so that businesses know what to expect. She says to sort of shake it up again is going to bring about disruptions. No kidding. It seems like he is really strong in the disruptive part of territory. All right, stock of the day today, back to reporting season, was Reece, R-E-H, Nathan Somasundaram from Deep Data Analytics, and Raymond Chan from Morgan's weighed in.
I have a whole recommendation. Our analysts think, the Australian and New Zealand business certainly doing better than market expected. The US continue to be a drag because of the affordability, because of the low residential construction activities over there. Reece is a high quality company, founder-led business, but at this current price, we continue to have a whole recommendation. But got to admit, today's result beat market expectation, and also the company took the opportunity to slightly upgrade the market guidance as well. So that's certainly welcome.
Construction optimism is probably in the local market is a bit overpriced. US, obvious reasons, borrowing costs are high, and that slowed down, and the cost of construction is going through the roof. I mean, you think of any commodity that's used in construction, steel, copper, whatever you want to think of, they're all going through the roof. So, and that's going to hit them. So now they're trying to, they get into a position where they're, as one of my contacts said this morning, they're trying to be the Bunnings. And the problem is, Masters learned a long time ago, it's hard to be competing with Bunnings.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring, or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, let's get across some of the market leaders and Reece, our stock of the day. If you'd like to listen to that analysis in its entirety, you can do so on our website, ausbiz.com.au. Just look at the top of the screen under series for stock of the day, up by pretty good 13% to $15.69. Guzman and Gomez making up some of Friday's losses. It is up by 8.6%. UBS looking at it favorably, saying it sees some value there. Ramelius, it's up by 8.5%. Pentoro, 8.5%, pretty much in Greatland Gold. Gold stocks, as I said earlier, we're looking pretty strong today. Megaport, that is a very sharp reaction. It's down by 20%. Megaport reported on Friday. Data 3, that's a really strong share price reaction as well, down to $7.80. Prenti Global reported today, off by close to 13%. Austal and Magellan down by 10%. In the smaller end of the market, you can see that there is a theme here with the resources plays, but Nuix reported, and shares did really well, up by close to 15% to $1.57. But those that lagged the market, including Eden Innovations, off by close to 15%. G8 reported, off by 14%. I was speaking with a guest last week saying, boy, he'd be very concerned about AI if he was a shareholder in Appen and this software sell-off. Korea as well. It's under takeover, but still down by 10% to 29 cents per share. We get U.S. factory orders today. They are expected to be lower, and we'll hear some more from the ECB President, Christine Lagarde. She's speaking in the United States, so it'll be really interesting to hear what she says about Europe, obviously the tariffs, but European growth as well. She will be stepping down from her role. Earnings tomorrow: Woodside, Light and Wonder, AUB, ARB, and Centre Group. We will be speaking with Elliot Rossino, who is the CEO of Centre Group. So looking forward to that one as our reporting season coverage continues. Reporting season, even the good reports, even the good broker upgrades, not enough to save this market from itself. We've got the banks into negative territory, so they were collectively down, but ANZ, the worst performer, off by close to 2%, Macquarie more than 2%. BHP tried its best along with Linus, South32, MinRes to lift this market, but it was really the gold stocks that saved it from a much worse performance. And in the consumer staples space, Woolworths and Coles, those traditionally defensive names, did end in positive territory. So that is a nutshell, or your Monday in a nutshell. I mean, there was plenty more detail that we could go into, but thank you for watching today. Thank you for listening to this podcast, if that's how you're consuming this content. I'd love it if you could leave us a positive review on your platform in which you are listening to this podcast. It does helps us surface for some other people as well. Look, we'll do it all again tomorrow. Look forward to it. See you then.